Now, if you're anything like myself, you're a dividend investor always on the hunt for new, innovative, higher yielding, dividend-focused ETFs that offer a boatload of cash flow from day one, but also offer a positive total return in the long run. So in this video, I'm going to give you exactly that. We're going to go through 5 less talked about high-yield, income-focused ETFs that offer crazy cash flow from day one, but all offer a positive total return since inception. Now, all these ETFs have been around for a decent amount of time, but some are less known than others. So if you want to go through these with me, make sure to stick around, drop a like down below, and let's get right into the first ETF. If you are a dividend investor who wants to level up your portfolio, you need to be tracking your dividend income consistently. And that's why I created the perfect dividend tracker that I've used to scale my dividend income up to all-time highs over the last year. Now, along with this dividend tracker, you're also going to receive my A to Z dividend investing ebook, which shows you how I personally started from $0 several years ago to now where I earn over $7,500 per month in dividends. So if you want this tracker and the ebook, go to the first link down below in my description and grab it today. So the first sort of less known, higher yielding, income focused ETF, one of my newer favorites that I've been buying over the last 6 or so months now, is the Goldman Sachs Nasdaq 100 Core Premium Income ETF, or ticker symbol GPIQ. Now, this ETF has done amazing as far as performance since inception, and this is due to the strategy of the ETF, which the objective says seeks current income while maintaining prospects for capital appreciation. So number one, it's going to be trying to earn you income, but also it's going to grow over time, at least hopefully. Now, it says reasons to consider investing: seeks consistent monthly distributions, aims to generate a consistent monthly distribution rate, generally from option premium and equity dividends. Number 2, core equity exposure with lower volatility, provides core equity exposure to the Nasdaq 100 index and dynamically sells call options, allowing for participation with rising markets and potential outperformance in negative to flat markets. So not only buys into the Nasdaq then sells calls, but it does so dynamically, meaning that there could be more potential for upside. So if you're an investor like myself that wants income but also wants at least some upside, this ETF could be a massive winner. Now lastly, it says diversifying source of income, seeks to deliver attractive income with a lower correlation to traditional income sources and their risks. Now, it's been trading since October 24th of 2023, so it does have a bit of a performance track record, and also the net expense ratio is pretty cheap at 0.29%. Now, since inception, this ETF is up around 31.69%, but keep in mind this is also along with offering distributions to investors somewhere in the 40-cent, 38-cent range on average. Now, another thing I love about GPIQ is that it does offer a very consistent payouts, or at least it has over the last 12 or so months. So even though this one is a little bit less talked about in the dividend or income investing community, GPIQ is one of my favorites, and I'm definitely going to personally be building up a position in this one over the next year. Another somewhat less talked about ETF that I personally am planning on adding to my portfolio, I don't have any as of yet, is one of my other favorites, QDTE, the Innovation 100 one day till expiration cover call strategy ETF. Now, this ETF has a very interesting strategy, and it says right here, QDTE utilizes a synthetic cover call strategy that seeks to provide current income on a weekly basis, while also providing exposure to the price return of the Innovation 100 index. It then says in the overview, it says the Round Till Innovation 100 one day till expiration cover call strategy ETF, or QDTE, is the first ETF to utilize 0 days till expiry or 1 day till expiration options on an innovation index, the Innovation 100 index, as defined in the fund prospectus. Now, it does this by seeking to provide overnight exposure to the Innovation 100 index and generates income each morning by selling out of the money 1 day till expiration calls on the index. This ETF is, of course, actively managed. Now, the distribution rate as of right now for QDTE is somewhere in the 38 level, which means this ETF not only pays out distributions weekly, but at least so far has been paying out massive ones. Now, again, it seeks to pay out weekly distributions out of sold option premiums and allows investors to harness volatility and see massive income potential. Now, the ETF has an expense ratio of almost 1%, which is sort of to be expected with the level of complexity with this ETF. It's been trading since early last year and already has almost 700 million in AUM. But what you guys probably want to see is what sort of distributions have been paid so far from QDTE. Now, just to warn you, they're sort of all over the place. We have almost a 30-cent weekly distribution as of recent, then an 80-cent one, an 86-cent one, then a 16-cent one. They are literally sort of all over the place, somewhere in the 20 to 30-cent range on average, but really you never necessarily know exactly how big or how small they're going to be, which is probably why for me personally, just with my strategy, I always keep this one as a smaller position in my portfolio, just because I can't really handle those sort of swings. All to say that QDTE, like I said earlier, is going to find a place in my personal portfolio because it offers weekly distributions, and of course, it's offered almost 18% return since inception. Now, the next sort of less talked about high income ETF, another one of my personal favorites inside my portfolio as of right now, is QQQY, or the NEOS Nasdaq 100 High Income ETF. This ETF offers a distribution monthly. It has an expense ratio of 0.68% and is offering almost a 14% distribution rate. Now, the way this ETF works is a little bit different. It says it seeks to distribute high monthly income generated from investing in the constituents of the Nasdaq 100 index and implementing a data-driven call option strategy. It also does so tax efficiently by taking advantage of tax loss harvesting opportunities, in addition to utilizing NDX index options classified as 1256 contracts, which are subject to lower 60/40 tax rates. Now, it lastly says the fund utilizes a call option strategy that may at times both sell and buy NDX index options, which may provide the opportunity for upside if the market decides to rip. Now, one thing I love about this ETF specifically is the fact that it pays around a 14% yield, but also the payouts are very, very consistent, somewhere around 60 cents more or less per share per month. Now, also the performance of this ETF since inception is around 20%, which once again is a massive total return, taking all things into consideration. All in all, an awesome Nasdaq 100 high income ETF, one of my favorites across the market that some investors are starting to talk a little bit more about, but not necessarily as much as others. Now, speaking of NEOS ETFs, another ETF that I'm starting to see some investors wake up to, but not necessarily as many investors compared to things like GPIQ and GPIQ, is SPYI, the NEOS S&P 500 High Income ETF. Now, this ETF, just like QQQI, pays a distribution monthly, has the same expense ratio, but this one has a bit lower of a distribution rate. Now, the strategy for this ETF is the exact same. The only difference is that this one utilizes the S&P 500. SPYI has become a massive position in my portfolio over the last year or so. I think I currently have around 900 shares personally. This ETF, at least so far, has been amazing and has offered around 35% NAV performance since inception. Now, last but not least, this is another one of my newer favorite ETFs. I'm a bit worried about this one because of the recent performance of it, but I do have a smaller position in it, and I personally am pretty bullish in it long term. I'm talking about the Defiance ETF, SPYT, or the Defiance S&P 500 Income Target ETF. Now, this ETF has a 20% distribution rate, and that'll make more sense when I explain how this ETF works. So it says aims to achieve a target annual income of 20% in the S&P 500 using options paid out monthly. It says SPYT is an actively managed exchange-traded fund dedicated to generating current income. Our strategy revolves around holding shares of ETFs that track the S&P 500's performance and engaging in selling of daily credit call spreads on the index. Now, the income generation portion says SPYT's investment approach is meticulously designed to generate income through option premiums derived by selling index call spreads, the primary driver of the fund's yield. They then say we sell at the money or near the money call spreads to retain upside growth potential and aim for a target annual income of 20%. It then lastly says trading each day SPYT sells credit call spreads on the S&P 500, providing options with near-term expiration. This entails selling call options at or near the money strike prices and buying call options above the strike prices. Should the S&P 500 value rise above the upper strike price, SPYT stands to profit from further upside appreciation in the index's value. Now, the current price of SPYT is down a little bit from where we was trading as of recently, but it's still hanging in there pretty good. Now, the performance since inception is around 13%, so it is in the green and offers, like you heard earlier, massive distributions, which are paid out monthly. Somewhere around 34 cents per share per month is where the 20% yield per year is going to land you. All in all, I think this ETF has a very interesting strategy, and like I said, only in time are we going to see how this plays out, but SPYT has found a spot in my portfolio. So those are 5 different, less talked about, higher yielding ETFs that I personally think are going to do pretty well in the future, and at least have already done pretty well in the past. Now, out of every single one of those 5 ETFs that we talked about, if you guys could only choose one to hold on to, which one would it be and why? Let me know in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.